There's some serious bearish pressure on Bitcoin and crypto right now. There is one nuance to this, though, which could lead Bitcoin to a bull trap a little bit bigger than what most are anticipating. For example, Bitcoin today made micro time frame local higher highs, while the stock market on Monday, September 26th, made small term time frames local lower lows. So the stock market going a little down while Bitcoin went a little up, meaning that Bitcoin is drastically outperforming, at least today, the stock market. And the trend of that has been about 35 to 36 days long. So what's going to happen if the stock market even takes a 2 or 3 day bounce, or even a 3-hour bounce, as the Fed chairs speak maybe 3 or 4 different times this week? A fake out could be very severe on Bitcoin, and a bull trap, whether it's a 2-day type of time frame or even a 2-hour type of time frame for a wick up to grab some liquidity up higher. It could be a lot higher than what we're thinking. I'm going to show you what to be prepared for in the charts, and then I'm going to tell you what I think is most probable. Those are 2 different scenarios, so let's go get some friggin' Bitcoin. You ready? We are staring at SPX, the index of the S&P 500. If the S&P 500 were to simply, let's clean up this chart a little bit, were to simply want to retest this origin line up here at 39.33. So let me zoom out so you can see what I am talking about, what origin lines are. See all these lines here, the blue lines, okay, going this way. These are the origin lines. So usually when you go below one, you either race back above it or you go below it and retest it before going back down. And zooming into current price, the index recently went under this origin line right here. So we're going to zoom into that. And I'm now on the 1-hour chart. So let's say that the S&P 500 decided to simply get one more quick retest of this, which would be a 7.5% move, or a retest of this horizontal, almost a 6% move, while Bitcoin is drastically outperforming the stock market. So this could easily happen, right? And so that could be a small relief rally, or just where the bears take a break and let the bulls play for a bit before the bears wake up and say, okay, time for coffee. Let's get some work done and drive this down lower. What would that mean for Bitcoin, as Bitcoin's already outperforming the stock market? So all you can say is, okay, well, let's go to Bitcoin. And usually if the stock market moves a certain percent, or the index moves a certain percentage, you can multiply that by 2.5 or 3, which is the normal amount that Bitcoin goes, the normal amount multiplier for volatility on Bitcoin. It took me a minute to figure out my words there, but the normal multiplier is about 2.5 to 3, right? So if that is a 5.5% move up on stock market, okay, assuming Bitcoin continued to outperform, I mean, you could be looking at something like a 15% move over a couple days. It could be pretty freaking extreme, right? And so let's keep going. I mean, we're not at 15% yet. In that case, multiplier about here, that's 23K, right? So let's mark that bad boy off and look left. Does that align with anything? It aligns with the last time price made an extremely aggressive and very fast move up. It could just want to play with these local highs here. It's right in line with that. And if we zoom into this, the starting point of this, it wouldn't have to go up as high on a percentage basis to meet here, because see where current price is, goes straight left. The starting point for that big pump was way down here below current price. So price wouldn't even have to go up on the same percentage basis to get to the same horizontal as it did back here. Does that make sense? However, I don't think that Bitcoin would necessarily continue strongly outperforming the stock market if the stock market made a 5.5% move up. I think that my chart, which I guess I can throw on behind myself here, my chart that measures Bitcoin strength versus the S&P 500, I would guess, let's go to the 8-hour chart behind me here. you can see that this is in an uptrend right now, a pretty strong uptrend, and Bitcoin is drastically outperforming the S&P 500. But if the S&P 500 went up 5.5 to 7%, I think this would have a pullback somewhere in this line, and therefore Bitcoin would not necessarily do a 15% move up, right? However, if it continued the trend on this chart behind me, and the stock market, okay, and the indices made just a normal move up, a small relief rally or a correction to the upside before continuing to make lower lows, that situation could brew into 21 to 23K Bitcoin. I don't think that's the most probable. I simply want you to know this for two reasons. A, if you're trying to short Bitcoin before that, there is this possibility that you could get smoked on your short positions. B, or number two, if Bitcoin starts rallying in that case, don't be thinking, oh, bottom's in, like all that stupid crap you're going to see on Twitter and maybe crypto YouTube. No, it just means there's a normal relief rally before lower lows on the stock market, and Bitcoin's already outperforming it. It's not that special. It doesn't really increase the chance that Bitcoin is bottomed, right? It's just natural movement up. However, I don't think that that is the most probable case. I do not think a rally up to 21 to 23K is the most probable, but there is one special thing up there that you could throw on your chart, super easy to guide yourself if Bitcoin goes up a little higher than what we're thinking in a week that members of the Fed, the US Fed, are going to be speaking multiple times this week. So like whales could do some weird stuff with price action, even though it's not necessarily an FOMC meeting. So let's go ahead and let me show you that one thing that you're going to want on your chart if Bitcoin goes up a little higher than what you're thinking as a bear. Make sure you follow me on Twitter, Cosasverdes with the number 2 afterward. I post some bomb charts and crypto price action thoughts on there. The YouTube tiers, if you click the join button right beside the beside the subscribe button, a 90-second video with pirates and skeletons and silly crap will pop up describing what it does for you and how it's different than Discord, and the links to the Discord community are in the description section of all my videos. All right, here we go. So the one thing that you're going to want on your chart is the weekly 10 EMA. And I have it on what's called an MTF EMA. So I can go to the 15-minute chart and still see the weekly 10 nice and beautiful right there. And what would that align with? It would align with a failure pattern above the weekly 10 before heading back down. And historically, this is pretty normal. That would put you in the 22, 21K to 22K area. All right. Let's put a pin in that so you can see the actual price of that. So if it were to hit it and get rejected on the nose anytime soon, that'd be about 21K. A failure pattern above would be about 22K. Making sense? I don't see Bitcoin rallying above that without some major... I don't see it getting much above that. I mean, 23K would be pushing. I'm actually thinking the highest bull trap that we're going to see is 21 to 22K, which would be lower than this local high. It'd be, kind of an angle like this, either a rejection or a failure pattern specifically above the weekly 10 EMA. All right, so now you need to stay tuned until the end of the video because I'm getting ready to show you what is more probable and what simple tools you can put on your chart to navigate price and do your own TA in the event that more probable things happen, which means price doesn't deviate too far in the bullish direction since the pressure is down. All right, so I'm getting ready to show you what I think is more probable and what tools to use. All right, here we go. I'm going to take off the weekly 10. Let's go to a different time frame and let's take off this. Actually, let's go to a different Bitcoin chart, just a different exchange here. And I am going to throw on what I have labeled here, the daily 21 EMA. I think the daily 21 is going to about ready to be our best friend. But if Bitcoin goes over it, what is your next best friend? The weekly 10. So right now you don't need the weekly 10 on your chart because it's out of play. But throw on the daily 21, I think it actually is probable because Fed members are speaking I think it's 4 times on camera this week, right? Jerome Powell, I think, is once or twice. And then once he'll have it'll play a recording, a pre-recorded thing but still, it's a reason for whales to create volatility in the stock market. And since Bitcoin has been crunched down without volatility, they're gonna play with Bitcoin, and it could have a 10% range, just like last time I talked about FOMC when Jerome Powell spoke on camera. I literally got the price path almost perfect with only 2 guesses, right? 2 days before it happened. So I don't want to necessarily make any guesses this time, but what I can say is they're going to. So the big bad days, are going to piss around with Bitcoin this week. And given that pressure's down, they're going to hit an upside target before they let it rip. Does that make sense? They're going to get recent shorters out of their positions, responsible people with stops or people with high leverage, liquidations, right? And then they're going to move it down because there's liquidity up there. They're going to go grab it before it goes down, most likely. Sometimes Bitcoin does just roll over. But if you're going to create volatility and have permission because of Fed chair stuff speaking, you're going to want to go in both directions before doing the mono direction. Make sense? So it really could go down, up, and then to the middle, and then down. It could go down first, then go all the way up, come back to the middle, and then roll over the next week. And so the last thing I'm going to cover at the end of this video, I'm going to show you why next week might be the big week instead of this week. And volatility will spike up this week only to land in the middle, because what I'm going to show you at the end of the video, it's a big fat candle that one of my team leaders on Discord showed me. And it gives strong evidence that while Bitcoin volatility might increase this week, it's going to land in the middle potentially. And I'll show you that at the end. But before we get there, let me show you what I think is most probable here. If I had to make one guess among the myriad ways that Bitcoin price could move, this is one guess among several. All right, so take a look. The daily 21 is often hit, and this is the 69K top back here. Okay, so Bitcoin's been in this channel the entire time besides 2 bull traps. Okay, one bull trap and the second bull trap, which was recent. So what does Bitcoin like to do before dropping down? Okay, let's zoom into here before a drop down. Okay, you see a drop down here. So we're going to go to that point. We see a drop down here. Let's go to that point. You see a drop down here, but it's a little bit different, so we're not going to cover that one. We see a drop down here, so let's go to this point. We see a drop down here, so let's go to this point. We see a drop down here, so let's go to these 2 points. And that is probably enough. All right, now let's go to a smaller time frame like I'll cut it in half. We'll go to the 2 hour, and we're going to see how this yellow line was freaking useful and why it might be your best friend. So before volatility went monodirectionally, like a big increase monodirectionally in one direction, okay? What did it do? It spiked up to hit the yellow line once, twice, 3 times, 3.5. It tried it on the last one. And then went down. It has the habit of doing this, I'm telling you. Again, I think I actually accidentally got rid of one of these in future price, but we'll still cover it. So you had a big drop down, okay, and price actually did a failure pattern above and just rolled over. So this was a failure pattern and then less volatility, and it did just go straight down. So this one is a little bit different, but the key is it still played with the yellow line, albeit in a different way. Right? So this one actually did just roll over. Right here, volatility, so let's zoom in a little bit more. Volatility got extremely low for 15 days. And what did it do? It spiked right up to this yellow line and went straight down. So the volatility went the opposite direction first, had its limits because the big bad days said, we're not going to take it over here. Now let's go down, get people out of their shorts first, and then take it down. And this is one of my best trades of the year on futures. Yeah, I hit that almost perfectly on Bitcoin, Ethereum, and 2 altcoins. Yeah, that was one of my best futures trades. All right, now let's go to, so this actually got into a small uptrend. Here we go. So before a decent size move down, low volatility, Bitcoin spiked up and didn't quite get to the yellow line, came up shy, but it went up. So let's zoom into there. Look, it went up and then straight down. And why does that happen? Because there are orders up there they like to go get before bringing it down because the whales make more money that way. there are more orders of the opposite direction, right? In form of liquidations and stops. So they can take on more shorts. And all the big bad days have to do is buy Bitcoin on what's called spot trade, not on leverage, not on futures, right? Or even on margin. I guess they could on margin. But just on regular spot, and they can drive up spot price with their tens of millions of dollars into their shorts on futures and then sell the same Bitcoin on spot that they just bought to get it up there. So they can make the money on futures because they know which way it's going to go because they're the ones who's going to sell it, right? So that's why Bitcoin has the habit of going up before it goes down, because the whales who are causing this price action, they're making more money because of it. They're shorting from up higher, and they're literally driving price into their shorts. Does this make sense? But don't blame the days. Days make patterns too. And I'm showing you the yellow line. It's a great guide for roughly where the big bad days are going to screw around with Bitcoin price so the big bad days can make more money, right? But all you have to do is know what the patterns they leave on the chart. Everybody farts, and you just got to know what you're trying to smell, right? So the days fart too. Okay, so we're essentially smelling farts over here, right? Sorry, bad joke. All right, anyway, so this, before this monodirectional drop down, Bitcoin price played with the yellow line once, twice, 3 times, and then look, right? So let's zoom into this part right here. Look, right before it went down, what did it do? It had an aggressive move up, well, fairly moderately aggressive move up. That's 6%. So if the stock market makes that 6% move up, about what I was measuring at the very beginning of the video, and the other chart I showed you, which was Bitcoin versus the stock market, that takes that dip down, that means that Bitcoin goes up the same amount as the stock market. So this is about what it could look like from current price, which would probably take it a little bit above the daily 21 EMA if it went up 6% from here. Went straight up to it. Straight to that damn line, and then went straight down because the big bad days make more money when they do it because they're driving price on spot up to their futures shorts. That's literally what they are doing. And that's also why you see price do weird stuff on the opposite. If price is going to go up, the big bad days will do a lower low first and then go up because they're driving price down into their longs. Because there's liquidity down there in form of liquidations of high leverage and stops of lower leverage and people trying to be responsible. But they drive it down into that so they can take on more positions, and then they buy it on spot. So they're buying back the same tokens, like in theory, like not necessarily the same, but the same tokens they sold to get price down there. Then they buy it back, right? But they don't care if they take a loss on spot because they're making money on futures because they know which direction they're going to drive it. So it's almost a risk-free trade. And if you're in a near risk-free trade, like a very small risk trade, you are okay with investing a little bit of money, right? Or dumping money, taking a small loss to enter a nearly risk-free trade. That's and Bitcoin price has only been doing that since about 2019. It's very obvious when institutional players started messing with Bitcoin price and futures. It's extremely, plus the futures of Bitcoin didn't come out until December 2017 anyway. And then Bitcoin tanked just days or hours after it came out. All right, probably because the big bad days had their short orders in about 1908. And they knew what day the futures would come out. All right, so after all those times looking at the yellow line, right? Okay, take a look. Here we go. What is that? That's only 3.6%. So it could easily do a failure pattern above it. I think it would actually get straight up rejected. But since Fed folks are going to speak this week, it could go a little higher, folks. If you look left, this area over here looks pretty interesting. Somewhere like this little guy, it could come on. Let's see here. How high? That's pretty high. That's 20,000. I don't see it actually going that high. Here's another area of interest. So this would be if it did a failure pattern above. Failure pattern means it goes above, but when it comes back to touch the yellow line, it falls through, right? As opposed to a rejection, it goes to touch it, then it gets rejected immediately. But they're both a form of rejection. Let's see here. So put a price tag in there. Yeah, that's right at 20K. I don't think this is the most probable, but I think a swipe up to here or a swipe up to 20,100 could easily happen because the big bad days are going to mess around with Bitcoin price when the Fed folks are speaking this week. So those are two pretty damn clear targets. Let me show you what this target would be behind me. That's 19,700 roughly. So you have about a $400 range. 19,700 to 20,100, I think, is the most. So this box here, I'll make a second box. This box here, in my opinion, this would be my best guess of where there's going to be a mini bull trap / liquidity grab. So liquidity grab just means it's faster. It goes straight up and then comes straight down. Bull trap means it takes time. It like pushes up in there and kind of dances around and then comes down, right? But in essence, they both just hit this level. One is faster than the other, okay? All right. So I think 19,700 to 20,100 is my favorite guess for how high Bitcoin price will go this week, as the big bad days are driving Bitcoin price into their already existing shorts. That is my best guess. Is it guaranteed to happen? No. But do you find any other YouTuber giving you precise guesses about this, this matter, about FOMC doing this, and describing, so exact guesses and exact range, and trying to explain all the reasons why, and cherry on top, third thing, giving you the exact one easy tool to use to guide yourself? I don't know. I don't think there are many people out there trying to do this. I'm literally trying to make it so you can do this yourself this week. Just yellow line, okay? And I think TradingView has a clap-on feature. You can just go yellow line, and it should pop up. Okay, daily 21. All right, here we go. Now, if this were to happen, what I was going to show you at the end of the video, here we are. If it does pop up and volatility begins increasing, I think what could happen here, and this is a macro range. See all this range? All right. I think Bitcoin might be volatile but it could go down first, then up, and then land in the middle. Or, so let me show you this. Okay. Or it could just go both ways. Boom, and then boom, 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 and then boom, and then back to the middle. Something to this effect until next week. And I want to show you why. But still, this would still satisfy the idea that Bitcoin has to become more volatile. It just doesn't have to do it in one direction. And I'm getting ready to show you evidence on why it might go both ways. So bidirectionally to increase volatility, and then land in the middle and wait for next week to go monodirectionally volatile. Okay, it's really, really simple. And I wouldn't have caught this myself. Again, one of my team leaders who does some fantastic TA showed me this, and I want to share it with the world for free. Free information, everybody. Come on now, come on. All right, let's see. Let's go. Yeah, I'm on the right chart. This is my clean chart. I will take off everything, bare naked freaking price, and I will go to the 3-month chart. So each candle consists of 3 months. All right. Let's take off the macro channel, and we can get rid of these highlighters. All right, check it out. Okay. Here's a pop quiz. What is it that is visible on the screen that would indicate next week? And if you're new, you might not be able to figure it out, but it is on my screen. There's something on my screen besides this guy in blue telling you next week. So outside of here, where I am, there's something over there that is pointing at next week. What is it? Alfredo. Yes, exactly. It is this thing over here. Ding, 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 ding. So that means this candle closes, what would that be? On, Friday-ish. And what happens if price hasn't fallen off a cliff, or it hasn't decided on a strong direction yet by Friday closure? That means it just keeps floating sideways, does nothing over the weekend, because Bitcoin won't separate strongly, usually, won't separate strongly from the stock market or Bitcoin CMEs, which are closed over the weekend. So if Bitcoin price won't go down until this quarterly closes, that would draw it till next Friday. Technically, next Monday. Now, because even though this closes this Friday, Bitcoin won't separate too far away. It won't navigate far away. It's like it's a compass. It doesn't want to go very far without its compass. and its compass turns back on around Monday. And so I'm actually missing one puzzle piece here. What's so significant about this 4 days? All right, so let's take a look here. And this actually says it could. So what I'm about to show you means it actually could go sideways. Stablecoin. Bitcoin could be a stablecoin for 2 more weeks. So it might be like the late in the first week or second week of October till Bitcoin heads down. And the message lies all in this candle closure, the 3-month candle closure. Let me show you why. All right, here we go. So if let's say next week it goes down, what could you interpret, and how could you anticipate that as a strong possibility? Well, this monthly candle closes just below here, just below this candle, and then the next candle gets the volatility, right? And then it really starts flooding down. And it wicks up a little bit to, in the first few hours of the first day of that quarter, and then screams down. So that would be next week, because this candle closes in 4 days, which leads to a weekend. Bitcoin won't want to move without its compass, leads to Monday. However, there is a possibility that Bitcoin just goes straight freaking stablecoin mode, because this next quarterly candle might want to backfill, most of this wick. It might want to go up. It likely won't go above this. So actually, let's see here. After this closure, where are we? After this, that's 20. Yeah, it's not going to go above there. So after this closure, Bitcoin might take a whole week on this next candle that begins in about 4 days. It might want to backfill halfway up this wick, which would take it to maybe 22K, right? Or maybe not quite halfway up, maybe only this far up, 21K. But that would still mean Bitcoin not only holds on, but does one of those more extended bull traps, all right, the ones that take longer as opposed to a liquidity grab. So it could go sideways and then just do a slow mini bull trap so it can satisfy backfilling this candle in the first week of this, which would put us 2 weeks out before a monodirectional, strong volatility move down. So Bitcoin might hold on until close, like October 10th, 15th, somewhere around there. Late first week, early second week of October. We might not get excitement till the downside until then. And this is our clue showing us as a strong, not a probability. I'm not saying this is the most, I'm trying not to sneeze, sorry. I don't do coke, so in case you're why is he scratching? I'm trying not to sneeze. I don't even need stimulants. I'm a spazzing as much as it already. I couldn't imagine myself doing that. But anyway, let alone being on camera. So what do I think is most probable now that I've laid out all this? Now, again, for this analysis, I'm going to get the comments. Oh, it could go up, could go down, could go sideways. Actually, yes, that is always the analysis. That is an accurate statement. Noobs laugh at that, but it is actually always true. And it's actually, it's sincerely a form of enlightenment once you realize that and stop being a noob who sneers at it and makes jokes about it. It's sincerely enlightening once you realize that is the truth. That's literally truth. The only difference between making a guess and the truth that it could go up, down, or sideways is that it's when you have a probability of one of those three. And right now, what we're facing is in the next 3 weeks, it looks like there is a probability down, but before then, it could go up, it could go down, it could go sideways, is what I'm saying. So expect that you're not going to have a strong edge until this next quarterly candle starts and it backfills a little bit, which might only take 1 hour. It could spike up, 2%, backfill half of this in an hour, and then slam down. So that would be next week monodirectional volatility. But if it takes that normal bull trap, a slower bull trap up to 21 and change, and then heads down, that could be the second week of October. So I think the time frame in which things become, in my, at least reading the charts now, where you do have an edge from an even timing perspective, you might not have an edge for a couple weeks. And that's what I'm trying to explain. Right now, price can be really choppy. And if you're trying to be short, I'm trying to help you. Hey, I really am. If you're trying to be short and you're putting a lot of money on it, you could get smoked. At the same rate, if you want to be short and you choose not to be short, it's possible that it does just go down next week and you miss the trade, right? The opportunity cost is there. That's possible too. It's going to be hard to read. I don't think there's a strong edge in the small term time frame. So the time frames of small, right? Small stuff. I don't see much of an edge right now. Price is literally just doing fucking nothing. And you don't have an edge, right? I hope my explaining when you have an edge, what an edge means, that means like you have a favorable scenario to put money on your guess of which way the market is going to be. And if you put money on direction without an edge, that means you're gambling. So I'm trying to save you money because gambling over time is not profitable ever. Ever. It becomes not gambling when you identify, oh, I'm applying money only when I have an edge because that turns me into the house, which means I am not gambling because my odds are better than 50 to 51%. And I'm only applying money when I do see an edge. I'm trying to help. So right now, it could go up, could go down, could go sideways. Expect an edge to develop over next week, maybe late this week, next week, or the week after. And if you see volatility in the form happening this week, realize that my opinion right now, reading the charts, is that volatility, even if it screams down, I would say, man, it's got a strong possibility of snapping right back up. I think it does. I think this week, if you see volatility, expect it to go volatile the other way and then land in the middle is my specific guess. All right. Now, where's the threshold on when I would flip monodirectional bearish this week? Let me show you what I would see. Wait for the Bitcoin chart where I would change my mind on this. Let me light this cigar here. I would say, let me go to the 1 hour. I would say if the point of control, even the top of the point of control becomes resistance. So I've gone over this micro channel multiple times. Just go to my past video, or actually just draw this on your chart, knowing that the beginning of this is roughly late July of this year. Okay, July 28th, right here. All right, just draw this. Pause the video and draw it. If the top of the point of control, which is zooming in here, the orange line here, if this becomes resistance after volatility to the downside, and then it can't get volatility back up to land back in the middle here, if it proves it as resistance and starts wiggling down, okay, then I will change my tune and say, okay, it looks like monodirectional volatility to the downside will prevail. But until that happens, I think a strong move down will be met with a fast move right back up to the middle this week. All right. But my most probable scenario, all right, is that I think price is going to interact with that daily 21 some way, either a rejection or a failure pattern. So if you're going short now, I think it's probable you would be smoked like this. And we also would say thank you for creating that liquidity so we can take on more positions. Click this video right here if you want to see a macro bullish case why Bitcoin actually might have bottomed. I don't think it's probable, but there are some ingredients brewing. And click this video right here, the second part of that video, the macro bearish case and all the things from a large time frame perspective that you need to have on your chart. Are you ready? Let's get it. See you later.